Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar overnight declined further after prices fell to its lowest point since July the 18th at 77.98. With hardly any bounce, additional weakness did emerge yesterday after an increase in job vacancies in August. According to the Australian Bureau of Statistics, ABS, vacancies jumped by 6% to 203,700 in the seasonally adjusted terms, leaving them up a stunning 14.4% for the same period a year earlier. Next week we have the RBA meeting. It is expected that Governor Phil Lowe may again reiterate about the rise in global interest rates have no automatic implications for us here in Australia. I somewhat slightly disagree with that. However, we would first need to see the US complete its 3 hikes, and then maybe we might see a bit of a slight change in tune from the RBA. At the moment, I still hold the view bearish, looking down towards 78.15 as minor, and then down towards 77.55. And with the break of 78.60, my objective holds to 76.50 to 77.20. Any advances on the day, I expect to see a cap around 85.90. We do have later the Chinese figures out at 11.45. The Cajun PMI manufacturing for September is expected to come in around 51.6. Last was 51.5. At one point, the US dollar looks like it was going to break above the key level of 93.35.40. However, the index failed after printing a high of 48, has dropped back around the 93 handle now. With the euro making a low of 117.20 overnight, it has still respected this level of 116.85 to 117.05. If we see further weakness in the US dollar, now it is imperative that we get a close tomorrow morning in New York at above 93.30.35 to get this move lower through 116.85 and down towards 116 handle. Failing to do so could see a rise back up towards 118. So if you are short, just be on your guard that you don't get caught short if the market does actually rally from a weaker US. Interesting to see that the market has failed for the second time at that 113 handle and now looking back towards the support at 112.20, with the 31 being the low today. We could see further weakness towards the support 111.60 and reassess from there. On the day, I expect to see the level around 112.70 to 113, above the 113 handle to hold. Well, the pound overnight was slightly mixed. First of all, it did weaken off on the back that Mark Carney, the Bank of England governor, steered completely away from any suggestion that an increase in the UK interest rates was looming. However, momentum was recaptured after the latest rounds of Brexit talks in Bristol, with the UK Davis saying considerable progress has been made on the issues on that matter. I do expect from a technical point holding to the downside, and my target is at 132.60 before any turnaround in the trend. Any advances should find a cap now on the day at 134.50. Well, gold did briefly print a low of 12.77 yesterday before recovering, and likely to continue to see dips to be shallow. I'm not bearish from here. I expect to see that this divergence to kick in and see a move up towards 88 and then down up towards 96, and most probably see dips now as a buy. Also, silver is portraying that same picture. And wrap up with oil. Well, the market did reject that level of 52.85.90 after printing a high of 94. At the moment, there is a slight bearish tone to the market, so we could see a pullback towards 51.35, but towards 50.85, I do expect to see demand to come back into the market and possibly see a retest to the upside. So that wraps up my daily video. Thank you very much for joining me. I hope you have a wonderful day and a great start to the new weekend.